Good morning, everybody. It's Wednesday, January 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 3 at 477.5. March soybeans are up 2.5 at 1050, and March Chicago wheat was up 2 at 548.25. This morning, we had consumer price index out, was up 0.4%. The 12-month inflation rate came back at 2.9%. And core CPI, which is heavily followed, came back at 3.2%, which was a little bit better than the estimates. Caused a sharp rally in the outside markets. The Dow's up 650 currently. S&Ps are up about 8. So a nice pop in the outside markets here. A couple things to note here today. We'll have NOPA out today, looking for around 205 million bushels. It's an estimate, so we'll get those numbers and talk about them certainly tomorrow. Good morning, guys. Saw another pop in corn open interest overnight, up 27,557. So last 3 sessions seen a huge pop in open interest. So Justin, maybe a few thoughts to kick us off here this morning, and then we'll throw it around the room.
Yeah, Dan, it's pretty impressive. I think there's been massive amount of farmer selling and fund buying after the report. So continuation of that, we'll see where commitment of traders ends up. But by all good estimations, we're 320 to 350,000 longs in corn now. Probably long soybeans, most of the complex in beans, still short wheat. But yeah, it's, I think it's just continuation of, bullish fundamentals, bullish technicals, putting more premium back in the market as we, continue to talk about on the show. Argentina, looks like they're maybe going to get some better rains, but that's kind of, up to debate until it happens. I think there's enough bullishness in these numbers from the report that you have to start proving some of these, bearish production numbers. So far, a lot of the numbers that we've written down are, TBD. So I think that, a normal market, right, it puts weather premium going into a growing season. You've got this fund long that, rightfully so, got bullish, got long at very good prices. Call it around harvest, started flipping from short to long. So that's going to be in my opinion, that's going to be a very tough long to shake out going into a growing season. Because they have a long from a really good level. So you're going to have, I think, a lot of bearish things thrown out to shake this long out. And as long as they're right, they'll continue to grow the position, so.
Yeah. Good.
So, soybeans, I'll just make this quick, but, soybeans, I see a lot of people complaining on Twitter on, different feeds, this is, BS, all these kind of things. Well, it is what it is. Soybeans did get to a cheap price. They got to $9.60. We talked about this a long time ago. $9 10 years ago was a cheap price. So I don't think you can really look at it objectively and say that beans didn't get cheap. They could always get cheaper, but we did. We're not at high prices. So I think just saying, South America's got a really big crop. Well, that's why we got to those prices. So we did trade that. I will say that beans are the weakest link, but so what? The funds are flipping. They didn't get paid to be short anymore. South America is going to have a big crop coming online, so you'll definitely have headwinds. But what's interesting to me about it is the rally in beans is being led by the front end, which is where the South American supply is going to hit and compete against. And it's still kind of going against that. Now, maybe that's just because that's where all the shorts are. That's to be determined. I think if I was a hedger, that's certainly the first commodity I'd be, putting more money into protect. But, as a trader, it's turned up. The funds are flipping. You just got to be a little cautious here on just saying you got to be short because South America's got a big crop.
Yeah, tough hill to die on if it doesn't turn out that way. Ben, what's on your mind this morning?
Just to real brief to touch on what Justin said about soybeans. Early in my trading career, one of my mentors told me, he said, be leery of a market that's doing the opposite of what you think it should be doing. And I kind of think that's where soybeans are at today. Everyone's looking at a little bit in the rearview mirror. We've gone, we've knocked the projected carryout in beans down as well. Everyone's kind of focused on corn, but we've knocked that down pretty sizably over the last 3 months. And we've put out some pretty big numbers, projections for South America. They may come to be true, but we now have a scenario where the U.S. is a little bit snug on beans. We could see cancellations later. We had some massive buying just a couple months ago. And certainly we're going to be vulnerable to those sorts of things. But right now it feels like they want to buy it. And the next stop is I think the 200-day moving average, or the 100 up at 1080 in beans. So kind of like watching for a minute and seeing what they do. And I think one of the things that you have to plan in your head here is we are building these long positions, and there is no reason for them to get out prior to Safrina, prior to U.S., to a little bit more certainty with the growing season, but that just means that somewhere down the line, if things go right, that's going to lead to one of those we break 70 cents in 6 sessions type of moves, right? So I think how you construct your hedges, should we get a continually appreciating market, is going to be the key to success on marketing, whether or not we are at 480 on our way to 8 or at 480 on our way to 380. So just having a little creativity and be open to the possibilities of what corn can do.
I think it was interesting yesterday too. There was a story out that they're floating some options on these tariffs. It hasn't been released, but they were talking about potentially maybe doing like a 2 to 5% increase each month to gradually do it. So I think we talked about it pretty extensively yesterday, but there appears to be like the administration is wanting to work more closely with them versus just slapping a huge penalty and penalizing them, which, to your point, Justin and Dustin, yesterday, maybe it turns out to be pretty friendly that we, play nice and do business. They need the beans. So I thought that was interesting. Dustin, maybe a few thoughts?
Yeah. I think, it goes back to like, are we trying to exclude the Chinese economy, or are we trying to get better terms and negotiate, right? Like that's the main questions. I would think that, Trump is not anti-business. We're not just trying to be U.S. only here. I think this is all a negotiating tactic, and we should keep that in mind, is that the goal is not to just be a tariff man and ruin the world's economy. So yeah, I would say benefit of the doubt that they're trying to get to, a better favorable terms, and it could be possibly a bullish thing. One thing I'd note with the CPI number today, the currencies are moving favorably for grains. Dollar's down, euro's up, the Brazilian real is up the highest since December 5th. So another reason we probably turned a little higher as well this morning. So
very good. Any anything else on the grain side, guys, before we move out?
No, I think the NOPA number will be interesting. It's there's some new crushing facilities that have come online. So in my opinion, you're seeing the next phase of, these biodiesel type expansions. So, 205 is the estimate. So talked about this a lot. I mean, these are numbers that, are 40 million bushels above where we used to be on a monthly basis. So we have built a massive demand base. Obviously there's some questions, that we all have on 45Z, blenders credits, how is, the Trump administration going to handle some of these things? I think it was weird that the Biden administration kind of punted on it, kind of gave some guidance, but didn't finish it, which I don't fully understand why they didn't just put something in place and make Trump repeal it if he had to, but it is what it is. We'll see how that goes. But, that being said, there's all these crush facilities that have come online. So we're gonna see some of these new plants that have come online in this report. So that's why we're hitting these numbers. I think we've built a tremendous base in this country for domestic demand, and that's one of the things why I've been kind of cautious on the tariffs is that we've already. I think we started this trend 4 or 5 years ago of realizing that South America is going to be a continuous problem for export competition, and that we need to build this base domestically. So I hope that continues. And I don't think tariffs are going to be or export competition is going to be as big of an issue, because, Ben said we did, pick up some good demand recently in soybeans, but the Chinese, U.S. book of business has been relatively small. So there's not a ton of stuff they can even cancel relative to where we were, back in, 2018, 2016, those kind of years. So that's all.
Love that. Ben was looking pretty inquisitively over there, like he had something to add.
No,
up here this morning, Ben.
I think Justin hit it right on the head. Like we started fixing the problem a long time ago, and I think the interesting conversation here as we see this is how does Chicago Board of Trade beans react when beans in the U.S. are a lot snugger than we thought 3 months ago, and there's bazillion beans in South America potentially, to see how this thing trades. And is it a basis thing? Is it a flat price thing? I think it's going to be hopefully be an exciting volatile time, because the last year was enough to grates on everyone's nerves. Bear markets are not fun to be a part of.
Yeah, Ben, kind of interesting thought popped in my head, but years past when you get really cheap, right? The always thing that killed bull markets was we're importing Brazilian beans. Here's the here's the ship, right? Here's a picture of it with all the people on it. It's coming, right? That would always kill the bean market. And what if we prevent stuff like that? What if we put tariffs on Brazilian beans? What if there's all sorts of things that could be different. This used cooking oil thing's a big deal. It should have never been a deal, because we're idiots for paying taxpayer dollars for that kind of stuff. But I started thinking about, we would import Brazilian corn when corn was tight, 2012 through, some of those years, we would import all these South American products. But what if we put tariffs on that kind of stuff too, to really protect the U.S. farmer? China's been doing this for decades, having $10 corn, $9 corn prices, protect to stimulate their growers, relatively cheap for their government to support farmers. You could see some things like that Trump does, instead of just saying, here's $50 an acre, to sit through the pain of a trade war. What if, some of these things make it, I don't know, just naturally go higher. So,
well, I think it's interesting too that there was definitely a concern, and a legitimate concern, with a change in administration. But I think the trade may have been leaning too heavily on that, and I find it ironic and that we see beans $1 off their lows, and corn 87, 88, 90 cents off their lows that they traded this year. And from the time that he was elected, we're a solid 45 higher in corn, and I don't know, pick your price in beans, but at least 50 higher. We spent most of that time around $10. So could be a little pain on that. So it's fun.
Yeah, no doubt. Got a minute here before we open. Ryland mixed cattle trade yesterday, and hogs are about $6 off the low. So a little bit of a reprieve there in the hog market. What are your thoughts this morning?
Sorry about that. So it looks like, just kind of two-sided trade. We're starting to see I think the waiting game is here, just waiting to see what happens in cash. Beef prices were just kind of mixed yesterday. So overall, I think there's still a lot of optimism, but nobody wanted to push it too hard yesterday. So just you're seeing maybe a little producer hedging up at these levels as well. It's just we're not seeing a huge amount of concern just yet from the big longs that are in the market. I think everybody's kind of waiting to see 205 plus or something in cash this week, but we'll see. We still got the discount on the board. I think that's something the market's just kind of has as of note right now, but yeah, we'll see how it kind of shapes up. Just waiting for a little bit of some fresh news there. On the hog side of things, yeah, it's been a massive rally. We've seen, I think we're seeing the funds start to come back and buy it. There was a little bit of headline trade. It looks like UK banned German imports of pork because of a hoof and mouth disease that was discovered in Germany. So I think you got a little bit of concern on that front, maybe a little headline trade. So I think we'll just kind of keep and monitor that situation. But as of right now, that I think that just kind of hit the headlines may have helped extend this rally a little bit, but it's gone pretty far pretty fast. It doesn't feel like the trade wants to be as long at this point. So I think that's something just to be cautious of. So it seems like we're starting to see a little bit of stability in cash, a little stability in carcass, but overall I don't know, it seems like it's kind of a cautious trade after such a big rally. Maybe see a little bit more producer hedging at these levels.
Very good. Appreciate the update. Just came into the open here. We got March corn up 3.5. It's 478. March soybeans are up 5 3/4 at 1053 1/4. And March Chicago wheat's up 3.5 at 549 3/4. Tomorrow morning we'll have export sales out at 7:30 Central. We'll take a look at that report, talk about it in the war room. We also have some really exciting news, so tune in tomorrow. We've got a piece after we wrap tomorrow, some really exciting pricing news for AgYield for new clients, and so be sure to tune in. We'll have that information, more information about that out tomorrow. So again, appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything AgYield. So again, thanks to everybody that supports the show. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.